All right, everyone, welcome back to the channel, which is all about income-oriented investing. And I'm joined by a very special guest today, Nick Correa, who is the head of crypto at Purpose ETFs, rather. So, Nick, thanks so much for taking the time to join us today on the channel.
Yeah, thanks, Adriano. Really, really happy to be here.
So, important question for you. Does this have any impact whatsoever on the Purpose ETFs? So either the yield ones or the non-yield ones, right? The Bitcoin and Ether one, any impact whatsoever? I know you guys released, I just saw an article, because there's, so it seems to me like your crypto is being stored with Gemini, and there's a little partnership with Genesis, the lending partner, and Genesis might be going bankrupt, but you guys have stated that it has nothing to do with it. Gemini is headquartered in New York and it's safe. So any impact, any worries whatsoever?
Yeah, so I'll start off by saying, none of our crypto funds, none of Purpose's funds have any exposure to FTX or Alameda. We've never done business with FTX. We had no funds, sort of implicated in anything that's occurred, right? And so I think that's, just to sort of take that off the table, right? Mm-hmm. In terms of sort of how our funds are structured, I think it would be important to sort of explain, the structure of our funds and why they're really transparent and safe, right? Because I think, safety, transparency, and regulation is very important, right? And it's no surprise that this FTX event happened with offshore entities. In fact, FTX would, sort of hop from jurisdiction to jurisdiction, because they didn't like, the regulatory environment in one locale. They would move their company and they ended up in sort of the Bahamas, right? But I'll start with, how the Purpose funds are structured. And so, we have, as you mentioned, we've got, the 4 crypto funds, right? All of our funds are regulated by the Ontario Securities Commission, so the OSC, right, which is the regulator in the province of Ontario, okay? So they're all regulated fund vehicles, just like any other ETF or mutual fund, that's traded out there, right? So that's the first piece, right? And, we at Purpose always focus on creating product that has the highest regulatory standard that's possible. And we also do a lot of diligence on sort of the counterparties, that we work with, right? It's we always look for, trusted world leaders in sort of what they do, right? In terms of how our funds are structured, so if I start with the 2 spot crypto funds, so BTCC and ETHH, right? Yeah. The way those funds are structured, okay, is all of the crypto assets, okay, that the fund holds, they're all stored in segregated cold wallets with a qualified custodian, okay? Now, what does that mean, okay? So segregated cold wallets means, that we have separate wallets, crypto wallets, that are only for Purpose's funds, okay? They are in the name of Purpose's funds. So it's not even in the name of Purpose as the company. It's in the name of BTCC, the name of ETHH. Those are the actual owners. It's the fund that actually, the legal entity that's been established as the fund is the legal owner of those crypto assets, okay? Those crypto assets are, held in cold storage. They're held with Gemini, who's our qualified custodian. Okay, Gemini holds those assets in trust. So Gemini is a trust company. Okay, that is regulated by the New York Department of Financial Services. So Gemini is domiciled in New York State. So they're not in an offshore entity. In fact, they're in, the financial capital of the world.
Not in the Bahamas.
No, not at all, right? They're located in, New York City, which is the financial capital of the world. They're regulated by the New York Department of Financial Services, which is, one of the premier regulators in the world on financial services, okay? And they're regulated as a trust company. And what a trust company does, is they hold assets in trust for a beneficial owner, right? That's all they do, right? They just hold the assets, and that's their sole role. So they have a legal and fiduciary responsibility to hold those assets. Those assets are never lent out. They're never rehypothecated, right? They just, all they do is they sit there. So think of it as a digital vault, okay? The assets stay in this digital vault, okay? They're disconnected from sort of, the internet. That's why they're cold wallets, okay? And Gemini holds all those assets one-to-one. So if we, deposit 1 Bitcoin, Gemini holds 1 Bitcoin. They don't hold, the equivalent of a Bitcoin or the equivalent of an Ether in some other, US dollars or in, some other tokens. They hold the actual asset we gave them.
They can't lend it out. They can't take leverage against it, borrow against it, do funny business against it, is what
Absolutely
I'm assuming,
not.
right?
Exactly. It's, I think of it as almost like, it's like, I mean, not a perfect analogy, but it's like coat check. You give your coat, you get a coupon, you go back, you give your coupon back, you get your coat back, and the coat should be on the hanger in the back room. That's full stop. It just stays there and it's secured. Right?
Yeah, I was thinking like a safety deposit box at a bank or a Swiss bank or something like that, a gold vault or something.
Exactly. I mean, yeah, gold vault is the best analogy, right? It is a gold vault. Okay. So that's where the assets are stored in. And again, Gemini is a qualified custodian, which means that they have to meet stringent audit requirements. They're regularly audited. They have to meet lots of compliance, operational compliance. So you may hear of things called SOC 1, SOC 2, and these are compliance reports that independent firms will audit in their industry norms around safety, security, and trust. Okay. And then in addition to that, as a qualified custodian, they're required to hold reserves on their corporate balance sheet to ensure, that they remain solvent as a company, right? So that's sort of, the way that we, our assets, our crypto assets are held, right? Okay. And so that's, sort of the structure. And like I said, this is all regulated. Okay. And so those are, BTCC and ETHH. Okay. Then we have, ETHY and BTCY, which are yield funds. Okay. And the way those yield funds are structured, it's a really clever structure, right? What those yield funds do is they effectively hold units. So ETHY, the yield fund, would hold units of ETHH, right? And so what you're getting with ETHY is you're getting all of the benefits and the security of ETHH, right? And then you get the yield. And the way the yield works is, our portfolio managers will write, covered calls on our underlying units, okay?
And on the ETFs themselves, like on ETHH, on BT.
Exactly.
Okay.
Yeah. And those covered calls are traded on the Montreal Stock Exchange. Okay.
Yeah.
And so they're traded on, again, a regulated exchange. Our counterparties, that we trade with are, typically market makers and traditional financial institutions that are sort of in, the options, liquidity markets. And so that's how those two funds kind of generate the yield. The yield is not generated, through lending out our crypto assets. I want to just be very clear that we do not ever lend out any of the crypto assets in any of our funds. That's just not a strategy that we employ in any product that we have.
Very important distinction there, because that, and correct me if I'm wrong here, that's what Genesis does, right? This has nothing to do with that the way they generate yield is actually writing the covered calls on the underlying ETFs. Right?
Exactly. Yeah.
Okay. Perfect.
Yeah. And so basically you think about it, it's really people just sort of speculating on the price of our ETF. It has nothing to do with sort of, what we would call, lending. And so just to clarify a little bit about the Genesis, Gemini sort of,
Sure.
First of all, they're two different firms. I've met many people that have confused because, they have similar names.
Same, yeah.
And it's very easy to get confused. They're independently different companies. Right. So Gemini and Genesis are not related in any way. They're separate organizations. Okay. Even though they sound the same. It's important to know. So Gemini had a product which was, focused on retail crypto investors called Gemini Earn. And that Gemini Earn product basically was a product where people would, sort of deposit crypto. And then they would lend out their crypto to Genesis and Genesis would then, provide a yield on that crypto. Okay. All of that's, very clearly disclosed. So, Gemini has never, not disclosed anything that they were doing. And so, it's clearly disclosed, but it's a very separate relationship, right? And in fact, I think if you, sort of go into the, the legal framework, you will likely find that, investors, when they were, opening a Gemini Earn account, there was one relationship as between the investor and Gemini, which was really just to hold the crypto assets in custody for them. And then there was another agreement that the investor would enter into with Genesis that would say, okay, I, investor, am agreeing to loan out these, crypto assets to you, Genesis, in return for a yield. And so there were very independent sort of legal relationships, between the investor and those parties, right?
Makes sense. So purpose, nothing to do with that. They're not lending anything out. It's just in storage with Gemini. Whatever Gemini does with or whatever Genesis does, that's their problem. Nothing is getting lent out. It's just you're paying for storage basically with Gemini. Exactly. That's what I understand.
And to take your safety deposit box idea, we have a safety deposit box with Gemini that is only our safety deposit box. It's only in the name of the funds. Nobody else has access. They're segregated. It's not commingled with any other party.
Good. Well, Nick, thanks so much for the explanation. It was clear as day. I mean, for me, I am now super confident that nothing will ever, happen to the Bitcoin and the Ether inside the purpose ETFs. And you kind of know that once you see that the ETFs are still trading, the volume is still there. They've actually gone up in the last couple of days. So it's not really a surprise, but I just, on behalf of my viewers, and which a lot are worried or were worried because I got a lot of messages, a big thank you for that explanation. So a couple of other questions still regarding BTCY and ETHY. I want to focus on those because my channel is all about income. Those are the ones that I hold and that I'm really interested in. And you kind of already touched a little bit on some of the questions I have here. So let's start with the first one, which I think you kind of already discussed. Who's actually buying these call options that BTCY and ETHY sell?
Yeah. Look, it's we don't always know who's buying because they are traded on the Montreal Stock Exchange.
Yeah.
But what I can say is that it's a combination of sort of liquidity providers that are in the market. There's market makers who basically, because they're making a market on our underlying funds, they need to hedge some of their exposures intraday, and so they're often sort of in the market for options, calls and puts and whatnot, right? So it's generally what I would call like your traditional characters, right, that are in options markets, right? You might have some speculators, probably not a lot of speculators, to be honest, because I think if you were speculating on the price of crypto, you would probably go and buy one of our underlying funds.
Right.
But there's a lot of activity in sort of market makers and some of those TradFi trading firms, right?
Yes, sounds, this is a question I've been asking a lot of covered call managers. It sounds like it's pretty much the same thing on any regular covered call solution. It's market makers, big firms that have to hold it in their balance sheet, and maybe a small percentage in speculators. So thanks for that. Really appreciate it. So for BTCY and ETHY, is there any risk that, they go too low, they stop generating yield, or they could stop generating yield? As we've seen throughout the year, I think you're coming on the 1-year anniversary of these two ETFs here. Slowly a decrease in the distributions. And obviously I realized, and I spoke about this with Nawan a while ago, who's also from Purpose, and he told me that the distributions are going to be based on what the NAV is, right? If the NAV is going to go lower, it's only normal that the distributions go lower, and the opposite is probably true. And we've actually seen that, especially with the Ether one. There was that 1 month a couple of months ago where it jumped up, and now the latest distributions were very low because the crypto prices are rock bottom or the lowest they've ever been. So is there any danger that, hey, we can't give a yield anymore, or do you feel like every month there's always going to be able to have some yield on these?
Yeah, so it's a really good question, right? Like, it's important to me to take a step back and think about like how does the yield get generated and what what are the drivers of the yield, right? So first of all, the yield is generally like a percentage, right? Like so when we think about it, it's usually a percentage of the NAV is how the yield gets generated, and that's partly because it's a covered call writing, an options writing strategy, right? And that relies on options premiums, right? Which are often a function of historical volatility, price. There's a number of factors that go into sort of options premiums, right? And that's kind of how we think about it is sort of options premiums, right? So that's kind of one factor, right? Is sort of the it's a percentage yield, right? A lot of the yield is driven by or the premiums that you can get on the options is driven by the volatility. Okay, so the more volatile the asset, the greater the options premiums. And if you can believe it, I mean, if we sort of step back, I mean, crypto as an asset class, I think everybody knows, is a extremely volatile asset class, right? One of the most volatile asset classes out there, right? And so that's really good for these yield strategies, right? When you really think about it, because it's sort of like, incredible amounts of volatility. Now, about a year ago, I think there was more volatility in crypto markets. If you can believe it, volatility has actually come down. If you look at, I mean, notwithstanding this, FTX impact, which is, depressed crypto prices about, 20%. But if you look at sort of the last 6 months, crypto's generally, like, volatility in crypto has actually come down. And that's what's, brought down some of the yield. The pricing level, obviously, as a percentage function, impacts, the distribution, the gross distribution amount. But the price level doesn't impact your percentage yield, right? What impacts the percentage yield is volatility actually coming down. And that's what we've seen happen. And so, when we, I'd say a year ago, Noan would have said, we're targeting 12 to 15% yield.
Double-digit yields is what he said. Yeah, double-digit yields.
Yeah. Today, we're maybe targeting a bit lower, somewhere like 8 to 12%, might be the target, benchmark that we're looking at. And that's really a function of volatility and not really price levels. It's volatility that's really impacting that.
Okay. Yeah, much appreciated. $1 million question or volatility. What exactly is volatility? I know someone will have that question. Is it amount of trading? Is it swings in price? What would you say is actually volatility?
Yeah. So look, volatility at the basic level is a swing in price, right?
Okay.
And it's like you look at sort of a period of time, and what you're trying to determine is how intense are the price swings. Okay. So I'll give you an example. If you had a stock that was $10, okay, today, and a month from now is $10 also, okay, and every day the price moved up $1, and then the next day it came back down $1. So it went from 10 to 11, back to 10, to back to 11, back to 10, right? And it just kept going up and down like that, right? So there, you've got a stock that's started at 10, ends at 10, but it went up and down $1 every day, okay? And if you contrast that with a stock that had the same thing, started at 10, ended at 10, but instead it went up $9 and then came down, another, $18 and then went back up $9 and sort of, got to that, you'd have the same return, right?
Yeah.
You had zero return over that period of time. But one stock was incredibly volatile. The one that went up $9 and went down 18 and went back up 9, and versus the other one which only went up and down maybe $1 or $2 every day, right? And so that's what volatility is, right? So one is more volatile than the other, and the reason you care about that is, the risk of you getting sort of out with a positive return, is higher with the more volatile stock because it can go up really big and it can go down really big, right? And so there's less certainty on the value of a more volatile stock, right? And henceforth, why the option premium becomes higher. Because if I said to you, hey, you know what, Adriano, I'd like to buy your $10 stock in a month for $8, right? Now, in scenario one, you would say, you know what, I'm pretty sure it's probably going to be worth $10 or $11, $9 to $11, sort of a month from now, right? And so you look at that and you say, okay, if this guy wants to buy it for me for $8, it's going to be worth between $9 and $11. I need to charge him at least $1 to $3 for that privilege, right? Versus if you had the second scenario and I said, I want to buy that stock from you for $8 in a month, you'd look at that and you'd say, this stock could be, anywhere from like $1 to, $18 or $19, right? And so then you'd look at that and you'd say, well, if it's $19 and I sell it to him for $8, like I got to charge him at least $10.
Got to charge more premium.
Yeah. So I'm charging you more of a premium. So that's what volatility is and why it impacts options premiums.
Well, that helps me understand too. So it's really price swings, and because I'm assuming, I'm just thinking out loud here, because the price of Bitcoin and Ether has been relatively flat for the last 3 months, that's volatility going down. So it's not, it's relatively stable. I took a big hit, last couple of weeks, 10, 20%, 10, 15%. But the last couple of months, even like 4 or 5 months, you can actually see it on the Purpose website. When you look at, you see the graph and you just see, and then there was this like 3-4 months where it's just flat. So that's volatility going down basically, which means premiums are going to go down. So it's only normal. Okay. So do I have that right? Am I making sense?
Yeah, absolutely.
Okay.
So the best thing for, sort of options, strategies is for the price to be
crazy, yeah,
relatively flat, but to have these massive ups and downs, daily, because the more volatility you have, the more you can charge in terms of premiums.
Yeah. And this is just another reason why I am a long-term investor. The last 4 months will not dictate that the next 4 months, maybe volatility will spike, maybe it won't. I don't know. This is why my portfolio's bread and butter is the covered call strategy, because no matter what, I'm getting paid. I'm always going to be okay. I have that covered call on it no matter what, which is being professionally managed by you guys. So awesome. So yeah, that's it for the specific ETF questions. I have some general crypto questions. I don't know how far you could go. This is pretty much a matter of opinion. So Bitcoin and Ether, they've lost about 70% this year, in the last year. So what could you say to investors, long-term investors even, that are a bit worried, that are a bit disappointed in, to comfort them? What would you say to them?
Yeah. So let me first start off by saying, look, I can't provide investment advice, right? So
Sure.
none of this is investment advice. But maybe what I can do is provide a bit of perspective, right? Because if we take a step back and we think about crypto, right, and what is it and where it's going, right? I think there's some perspective that we that needs to be taken, right? So number one is we're still in the very early days of crypto, okay? Like when you look at crypto was invented in 2009 with Bitcoin. Ethereum, I think, emerged in 2014. I want to say ish, maybe off
Quite
a year
new
or so,
still.
right? This is all really new, okay? Like when you look at sort of adoption of crypto users, it's following a similar trend to internet adoption. And if we sort of compare what year are we in internet years, right? We're in 1995. Like that's where crypto is relative to the internet, okay? And to give people perspective, 1995, okay, and the internet, Google didn't exist. Just think about that. Just think about the internet right now. Try to picture the internet without Google. So this is like where we are in crypto. We're in the pre-Google internet is where we are, okay? So it's very, very early, okay? And there's part of being early is there's always going to be people building things, and when you're building something new, there's always mistakes that get made, right?
And bad actors. Very
exactly.
bad actors
Bad actors will always exist, and unfortunately that's a factor of life, and hence why everyone should always do their own due diligence, right? And anytime that they're investing their hard-earned cash. So we're still in the early days, and crypto has gone through waves, and many people are calling what we're in a crypto winter, right? Which means things have cooled down considerably. There's deep freeze.
I already started seeing thumbnails. The crypto spring is here. It reminds me of Game of Thrones a bit. It's crazy, but obviously it's to get clicks. But maybe we've turned the corner. Maybe this is going to be the last big crash. We don't know, right? I have no idea. So
no, exactly, and like there've been 3 or 4 of these winters, and every time a winter's happened, the price of Bitcoin, for example, has gone down 70, 80, 90%.
Yeah.
And every successive sort of period of time later on, we exceed the previous peak by a significant amount. And like just again, for perspective, although crypto prices are down 70%, this year, okay, we're still like, if you had bought Bitcoin pre-pandemic, okay, you bought Bitcoin the day before the pandemic started, okay, not that long ago, okay, you would still be up 2-3x on your investment, okay. Again, that's just the math, right, of what what prices have done. Now, like do we know what's in the future? We absolutely don't, right? But what are we seeing in this space? Okay, one thing that I've seen is although there are firms that have been pressured with the FTX collapse, and I'll be honest, many of them, there'll be many firms that will unfortunately go out of business. Many people will lose some of their assets, and that's not good, right? It's
just like the internet bubble, right? How many companies went bankrupt, and it's so similar that it's crazy. It's so similar to what happened, and they are calling it the internet the next generation, especially with the Ether. So that's what kind of has me excited. But anyway, sorry to interrupt you.
Yeah, no, you're exactly right. And so look, that will wipe out a portion of the market.
Yeah.
But what's interesting is when you look at what is the rest of the market doing? And everybody's focused on building. The communities that we're building continue to build. So the Ethereum community, the Bitcoin community, right? There continues to be development. Is there going to be as much investment as there were 6 months or 8 months ago? Probably not in the short term. But over the long term, there's going to be a continued momentum on continuing to build. Okay, the crypto ecosystem today is much bigger than it was, a year ago.
Yeah.
right? And so the the way I think about it is like, imagine we were building a new city. I see you got Machu Picchu sort of in the background, right? Now imagine we were building a city in the mountains, okay? And we started building some stuff, and what unfortunately happened is right now we had, I don't know, an avalanche or a mudslide, and it wiped out half our city. But there's still the other half that was built that's still there, and we're going to now continue to build on top of that. And I think that's what you're seeing sort of in the crypto ecosystem. Like there was a mudslide, and yes, quite a lot got wiped out, unfortunately. But there's still quite a lot that was built, and so it's not like we're starting from scratch again, and
Yeah.
continue to rebuild. People are building on top of what's already there, right?
Yeah, no, I completely agree, and that's what Brian told me from CEO Ether Capital, your partner when it comes to the Ether stuff. So I had interviewed him a couple of months ago, and he told me that people stop focusing on the Bitcoin price, the Ether price. If you actually go to the conferences where all the developers are developing on this technology, it's growing and growing and growing and growing. So his argument was, you got to focus on the technology more. That was actually my next question, or how I see crypto. I see it not as the next replacement to the US dollar. I see it more of a technology. So that's what he was telling me, that there's more and more exciting things. A lot of people are starting to work more and more. Even Kevin O'Leary says it. People all want to go work, the engineers, software engineers, they all want to go work in crypto because it's the next thing. It's, either in DeFi or whatnot. Would you agree with that? Would you, I mean, you're in the crypto game. So would you say that you're seeing more and more development, or the smart minds going in that field to really try to create something new?
Yeah. Look, I'm not going to make a bold statement as to say like every smart mind out there is going into crypto.
Of course,
I think that would be ludicrous. But I do agree, with what you just described, which is, there are some incredibly ambitious, innovative, smart people in the ecosystem, and that ecosystem continues, to grow. And to your point, it's really important to focus on the technology and what enables, what it can enable. This idea of, digital currency fundamentally is just really powerful. Programmable money. Think about it in that sense, programmable money. Then you think about, there's a whole wave of what I call tokenization of assets, right? This idea, I spoke to a firm, and, what they were doing is they were tokenizing art. So now imagine a Picasso painting, okay? And so you can now own a fraction of the Picasso painting, because what you can say is, you could say, hey, this Picasso painting, I'm going to create 100 tokens from them, right? And those tokens now become like stocks, and it's like, okay, you can trade them, you have ownership, you can give it, even though you don't actually have the physical painting in your possession, right? So there's concepts like that are really interesting. Then you think about what tokens can enable from this idea of, like, people may have heard of tokenomics, right? And it's this idea of, like, create a platform where users get rewarded and content creators get rewarded, and the whole ecosystem gets rewarded, and that's starting to gain momentum, especially in the creative communities, right? I don't know if any of you saw, but Bill Ackman, famed investor, from Pershing Square, he tweeted out about a project that I found fascinating that he's supporting, called Helium. And what Helium is doing is they're building out this decentralized Wi-Fi network, okay, globally, okay. And so now imagine a decentralized global Wi-Fi network, and what people do is anyone can go contribute their own Wi-Fi. So imagine you're at home and you say, hey, what? I have some excess Wi-Fi bandwidth, okay. And so you purchase some equipment, and then what you do is you're contributing this Wi-Fi to the ecosystem. And then the users of that ecosystem basically go and for them to use the Wi-Fi, okay, that you're providing, that's coverage, okay, they buy Helium tokens, okay, they contribute that, and then you, as a Wi-Fi provider, you get Helium tokens from the network.
Yeah.
For basically providing, Wi-Fi. And you look at a map of this, and it's global. Like, there's cities, and imagine now you could have Wi-Fi coverage, like you wouldn't have to go to Starbucks and mess around with sort of like it's like there's just a global decentralized Wi-Fi network that's not owned by anyone, it's owned by the users, right?
Yeah, no, I see the vision for I understand kind of the potential of this new technology, and it goes back to the internet, right? In 1998 or whatever it was. I remember I was in grade 6 or something, and this really smart guy did a whole speech on the internet and what it's going to do and the possibilities, and everyone was scratching their heads, including teachers. But look at us now, 10 years later. I mean, we can't live without the internet. I mean, we're doing this conference now, so this is just the next level. It's like an upgrade. So I think it's extremely exciting. I think it's the early stages, but hey, look at what happened in 10 years or 20 years. So I don't think it's going to take 100 years, but it could take a few years for sure. But I could definitely see the exciting uses of this type of technology. Very, very, exciting stuff. So this is, I believe in it. I like it. But of course, I personally am going to always be responsible. I set myself a limit of 10% of my portfolio, not more than that in crypto. And yeah, the next question I have, and this is probably the last question because it's like an hour here. I could talk to you for 3 hours, but I don't want to hold you up. So Bitcoin and Ether, we hear the big two, right? Those are the big two. The way I understand it, I don't really want to get into this too much. Bitcoin is more like the store of value, and Ether is kind of like for Internet 3.0, DeFi and a lot of that. But there's also other ones that you hear about, like Solana. I'm hearing more and more about Solana. I don't know what it does, but I've heard like that maybe is going to be the one for consumer. So like Solana consumer, Ether financial, transactional, Bitcoin store of value, kind of like digital gold or currency. So you guys have the Bitcoin and Ether yield ETF. Are you planning on making a Solana one, for example? Like how do we know which one is going to be the big one, or are you guys following those? What's your thoughts on that?
Yeah, so like, first off, we're always watching what's going on in the ecosystem, right? Because purpose, I mean, we're an innovation-led organization, so we're always looking to bring innovations and provide access to sort of investors, right, and to the world, right? That's our mission, right? Is to provide innovative access and product, right?
Yeah.
In terms of like in the crypto ecosystem, like I think it's important. You're right. Like Bitcoin and Ether are the big two, and it's really important to sort of step back and recognize how big those big two really are. And look, I mean, I don't know the exact numbers, but they're they represent almost more than 70% of total crypto market cap. Probably more even now, depending on the prices, right? And then, there have been times in crypto's history where they've been 90% of the crypto ecosystem has really just been those two protocols, right? There are so many really interesting projects out there, right? We just talked about a couple like Helium. There's Near. There's all sorts of protocols out there. Okay. Included in that set of protocols are what we call sort of layer one protocols, right? So Bitcoin and Ethereum are what we call layer one, which means that they're sort of native protocols, right? Like they have their own sort of ability to create blocks, and they have their own blockchain that basically is their own proprietary one, right? That was created from scratch, and it doesn't depend on any other blockchain.
Right.
And so, Bitcoin is one, Ethereum's another, and they're independent. There's a number of other ones as well out there. There's a number of other parties that have created other, layer one protocols, and Solana is one of them, right? There's Solana, there's, Cardano, you may have heard of, there's a few others, Polkadot, amongst others, right? And so, Solana is one of those. What does the future hold for them? I don't know. And we at Purpose, we don't speculate on what the future holds, right? We're in the structured products and investment products, business. But I think it's again, like I said, like these projects are it's very similar to any sort of internet startup. Like if you take the internet analogy, right? You've got Google and Facebook and also Amazon and others, right? And so they are large players, and they're the market leaders in kind of what they do. But there are others that have products, and there are other search engines out there. There are other social media companies out there. There are other e-commerce companies, and so Solana is another layer one, right? Amongst others, and Bitcoin and Ethereum are layer ones, and they have different parameters, right? I think Solana is really focused on scalability, which is processing speed in terms of transactions, and so that's sort of where they're trying to differentiate, and so like I said, like it's hard to gauge where they're going to end up. That's unfortunately no one has that crystal ball. But you can sort of do diligence in thinking about them. I think the way to think about them is sort of like I said, like they're other startups in the ecosystem, right? That's kind of what they are.
Yeah, no, that makes complete sense, and it's very early industry. It's very exciting. So Yeah, this is all very interesting stuff. Last question I want to talk about government regulation. So this is always in the news. You got people like Saylor and O'Leary always, pushing for it. Apparently this is, going to bring a lot of stability. And, I think that maybe this FTX collapse thing is really going to start putting pressure, especially on the US regulators, the SEC, to regulate. And I think that's going to be a good thing. It's going to, bring in institutional investors. You hear Saylor and Kevin O'Leary talking about it all the time. Institutional investors, they're going to come in with trillions of dollars. It's going to go to the moon. They're all predicting this. What do you think about government regulation? Do you think it's coming? Do you see any accelerated movements in the last couple of weeks because of the FTX crash? And do you think it's going to be a good thing for the industry?
Yeah. Yeah, look, I mean, I'll be the first to say, like, I think regulation is important, right? I'll give you an example. Like, before in like 1933, I think it was, before FDIC insurance in the U.S. So this is deposit insurance in the U.S. Okay, there were 4,000 banks that went bankrupt. Okay, because of all the number of banks. So imagine you depositing your money today into a bank, and next week the bank goes bankrupt and your money's gone. Like that's what was happening. Okay. And so, and then, they created a regulatory framework. They created FDIC insurance. The year after they created the insurance, the number of banks that went bankrupt went down from 4,000 to 8. Right? That's what the impact of clarity and regulation had on stability of that system. Right? So I think it's really important to get that clarity and that stability, because regulation, provides, that framework, right, upon which to operate. Are we going to get there overnight? No, because, like regulation is like everything. It has to evolve organically, right? People to understand, you have to, see what's going on in the real world and identify, where you need to create supports, frameworks, and clarity, right? So I think it's going to take some time for it to evolve organically. But I think that the attention and the focus that governments will have is going to increase following FTX. And I think part of the reason is, look, it's like anything in life, right? If unfortunately, squeaky wheels often get grease. And so until there is a squeaky wheel, people sort of stay back and say, yes, we need to get to regulatory clarity, but there was no impetus. There was no, catalyst event that said, hey, you know what, you need to prioritize thinking about this over some other, issue, gun control, violence, whatever it may be, that the regulators are thinking about. But now I think, given that this has happened and it's been such a large scale impact, I think it's probably going to really light a fire under regulators to say, look, this can be a risky proposition and it can have widespread impacts on people. And so therefore it's important that we prioritize, creating these frameworks, because frankly, it's important, right? It's important for the world. So I think you will see a bit of an acceleration.
I hope you're right. And I think it will. I mean, the US government, especially, so slow. I mean, just look at the cannabis legalization. They kind of botched it. It's still not even done. And, it's very slow. And it always takes a disaster, right? It takes a big event to get them going. So hopefully they do get going. So Nick, I don't want to hold you further, my friend. This has been a great hour. A lot of clarity, hopefully a lot of comfort and warm and fuzzy for my viewers who some of them have invested in the crypto ETFs. And I'm talking to my viewers here, if you still don't understand it, you don't have to invest in it, not a problem. But if you do want to take a piece, be responsible. Myself personally, I do 10%, not more than 10%. And keep in mind that this is my opinion here, and Nick, you could chime in if you want. I feel that the yield ones, the BTCY and the ETHY, is the safest way to invest in Bitcoin Ether, because you have them in a regulated ETF, plus you add the covered calls. Covered calls always adds more stability and defense. So I'm just going to collect those covered call premiums every month, and I'll wait and watch the show. So that's my attitude. What do you think, Nick?
Yeah, look, Adriano, I think, you definitely have a strategy. Unfortunately on our end, we're not in the business of providing investment advice. But, I'm always, really excited to talk about the crypto ecosystem. I think there's some really interesting technology, that's being developed. And, hopefully the industry can continue to grow.
Yeah. All right. Perfect, Nick. So thanks again. And on behalf of myself and my viewers and investors, thank you very much for not losing our Bitcoin and Ether. Much, much appreciated. And please continue to protect us, which, as you described, I'm good. I feel like you guys take that seriously. So thanks again. And hopefully we'll talk soon. Come back on the channel. and we'll talk crypto again. Hopefully when it's doubled in price or something. We'll see what happens.
Okay, sounds good.
Take care.
Thanks, Adriano. Have a good one.
Thank you so much for watching, everyone. I really appreciate it. Don't forget to hit that thumbs up button, that like button, and make sure you're subscribed not to miss out on my future content. Of course, hit that little bell next to the subscribe button so you're notified for any new content that comes out. Also, make sure to visit our website, PassiveIncomeInvesting.ca. That's where you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once, which is awesome. So this is a companion tool. It's a reference tool that will help you build your own portfolio according to your needs and goals, and it covers both the Canadian and American and US stock markets. So make sure to check it out. I have a video explaining from A to Z exactly what the product is. I showcase it, so there's no surprises. If you're interested, make sure to check out that video. Also, right there on my website on the homepage, I do offer a one-on-one coaching session with me. So this is a 1-hour Zoom call with yours truly for in case you need personalized help. I'll answer all your questions and I'll help you best I can. Just remember, I'm not a licensed financial planner or financial advisor. These are just going to be friendly conversation, right? It's just going to be my opinions. But if ever you're looking for that personalized touch, that personalized help, you could book a one-on-one with me. Make sure to check out the message on top of that calendar. That will give you a status of my bookings for that month. Also, we do have a Facebook group, great Facebook group, over 12,000 members. So make sure to join our community. The group is called Passive Income Investing, a nice Facebook group where everyone is sharing their thoughts and opinions and sharing their experiences. So it's a really nice group. We make sure to stay on top of the scam and the spams, and we delete those right away. So make sure to join our Facebook group. If ever you want something more personalized with us, you could follow us on Instagram. That's where we post more personal things on our adventures here in Panama. So follow us on Instagram if you want. And how do I always leave you? Continue to stay safe, continue to stay healthy, and of course, stay passive. See you next time.